Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, February the 26th, the year's 2020. Let's talk trading. Seeing is believing. So far this week, I've talked about charts and beliefs. Well, you know that saying, show me the money, right? Seeing is believing. And once again, beliefs are really, really, really hard to overcome sometimes. If you've got this deep rooted belief and somebody prevents you or presents a set of facts that contradicts your belief, might be hard for you to change. But sometimes seeing is believing. And that's pretty much how I come up with a lot of the things on the charts that I show you, the indicators and all, is because I see something and I have this little belief. And then usually what I'll do is I'll write an indicator or use an indicator I've already written, like the frequency distribution or the price travel analyzer, and I'll see if it's correct. I'll see if it's really true. The whole thing about trading horizontal lines, that's it pretty much how I develop these systems. Um, you know, when I write, the all you need to know about trading, that little 1 or 2 page document, I think I actually made it as long as 3 pages in a PDF just so it wasn't all crammed on one page, but it's really just one page. When you see that, when you look at price and it doesn't matter the time frame other than the one tick chart, and you have a bar or candle, the preceding bar or candle, and then the new bar or candle opens, price can either stay within the high and low of that previous candle, or it can go up past the previous high or down past the previous low, or both. Price can't do anything but that. It's going to do one of those things. So from an analyst standpoint, a logical standpoint, you look at all the options, all the possibilities, and you can see, yeah, it's going to do one of those things. There's nothing else for it to do. So if you can understand that and then believe it, it becomes rooted, because see, it's not just a belief, it's a fact. Now what happens is sometimes the beliefs creep over into the conceptual, and you start talking about things like supply, demand, support, resistance, or a bunch of other things. That's when you start to believe in something that may or may not be true. And I think Stevie Wonder wrote that song, Superstitious, when you believe in things that you don't understand. And that's what happens with a lot of traders. They'll put indicators on there and they don't understand even how they work. But when you look at the charts and you see something, then you start to believe it, whether it's the buy zone or the wick zone or any of the other things. I get email from traders, and I really loved getting emails where somebody says, I finally see it. I mean, you don't know what a good feeling that's the best. That's such a good feeling. It's the best feeling. It's even better than making pips, is knowing that I helped somebody else see it and now they can make pips. I mean, it really is that good of a feeling. So, as you watch my videos and other traders' videos, and as you're watching the chart on your trading platform, you know, see and see if it's a belief, if you're believing, or you're seeing a fact and now you really believe it. Now you get it. The light bulb went off, the aha moment. And probably one of the biggest, if not the biggest, aha moments you need to have is when you understand that in trading, the only thing you can really control is your risk. You can't control how much money you make, but you can control how much money you're going to lose on any one particular trade. That's vitally important. So, boys and girls, fellow traders, as you watch these videos, just remember one thing, that these videos are for educational purposes only, and your results may differ from mine, and that trading's risky. You can lose all your money. So if you need trading advice, financial advice, investment advice, please seek it from an accredited financial professional. That way, when you take their advice, and if you wind up losing your money, you know you took the advice of an accredited financial professional rather than somebody with a funny name who makes trading videos and puts them out on YouTube, or somebody who puts out trading information on blogs or other trading forums or tweets incessantly about trades. So we're looking at the weekly chart here. It's Wednesday. There's still some gaps that haven't filled. And you can see here that dollar yen almost went down to the bottom of this candle here. Remember, big candle usually wants to come near it. So let's see. We've got a, it says we have a low here of 0.9.65. We had a low of 9.88. That might have been close enough for a hand grenade, right? Point is, no, actually, it wasn't the low we need to look at. My mistake. What we need to look at is the open. 0.83 versus 0.88. That's 5 pips. And that's close enough for a hand grenade right there. So price went in. And you see here, when price dipped down here, if you look at this, there's a wick here. You see it started coming up. It crossed, broke out here, broke out here, broke out here. So it started to exit the wick zones of some previous days or previous weeks. So that might have given you a hint that, yeah, hey, let's get on that trade to the north. So as we move on and we look at dollar yen, here on a daily chart, you can see it's 166 pips above the open. So far today, it's an inside bar. And as you can see yesterday, it broke out of the opening range for the week, first trading days range for the week here. And you see now we're back inside that range with the potential to drop out again. Or it could go out the other side. We'll just have to wait and see what happens. Because, see, traders, I'm not about predicting price at all. I'm just saying if X happens, chances are Y is going to happen. And it's not really prediction. So here, chances are price is going to go through one or both of these zones. And you see it went through that one, went through that one. I mean, that's a no-brainer. I mean, that's going to happen every week. Unless we have a range of less than 10, it's going to break out. So looking at the inside bar here, once again, on this so far today, it's setting up that today might be an inside bar. So we'll look to break out of the high or the low. Range today, 1, 2, 3, 4, 5, 6, 7 pairs over 100. So that's not bad. We've got some movement, obviously, in the pairs, with dollar yen clocking in at a range of 57 at the moment. You can see here we had an H1 lowest open, and price gave you a couple opportunities to take some pips. You can see dollar yen's pulling back once again. So there might be an opportunity here to get in maybe at the top of the hour in about 7 minutes. Maybe you might have to wait for another hour. Looking at the buy zone, you can see we took out the pivot, which was above the buy zone here. And you see you had some buy zone trades. And depending on where you put your stop, if you put it near the open, you got stopped out. If you put it down here, it was threatened but never triggered. But you can see here, we haven't had a candle close below the daily open so far today. And that's something to look at. Are they closing above or below the daily open? Rats, green rats had some feasting. Red rats had some feasting. And that's where we are right now. We took out that pivot. Showed you that earlier. So you notice that I have pivots on a lot of different charts. It's not a magic number. I mean, it's no more different than having horizontal lines set every 10 pips or so. It's just something that a lot of traders look at, and the statistics show, how many times these pivot points are taken out versus how many times they've been missed. And so with proper risk management, you can trade usually from the open towards the pips, and you can make money even if the pivot point isn't hit. So for example, here, if you open, it got close, it started to pull back, and maybe when it got back down to this point here, you took your small profit. Better than a loss. So once again, that's the money management side. If you're up, you have to manage the money. And when you win, it's not house money, it's your money. It's in your stack now, it's yours. Don't ever think that you're trading with house money. Never, ever. Because that's on the road to ruin. Right now, you can see barely touched the wick zone and rejected here, in and out of the wick zone. Price doesn't like closing in the wick zone. See right there, once again, we hit the previous day's open price and was rejected. A couple of horizontal line trades off the previous month's high. Here we go. We open the trading profile. We got a short trigger, and look at what's happening now. See, these horizontal trades, like, to me, it's seeing is believing. You don't need a bunch of squigglies. You don't need a bunch of higher math formulas. All you need to do is see. And then if you see it, then you might start to believe it. You believe it, you act on it, you put your risk management in place. Worst thing that can happen is you lose your quote unquote bet. It's really no different. I mean, trading is not gambling, but you can use some of the skills that gamblers use to protect your money and grow your profits. You can see here that price drop at the tick level, a nice drop down there for some profit. And looking at the ATRs, average true ranges, once again, it shows that here we had 50%, the open, weekly open, minus 50% of the minimum ATR. And you can see price went up to it, turned around, and came back down. Let's see here, we got the weekly open right here, and price is red right now. And also you can see here, price came up to the daily open, plus half that minimum ATR, which happens to be 14 on the day and the week. But you can see here on the day, the minimum is ATR 6, and the minimum for the week is ATR 2. So once again, those calculations are in a loop. We calculate ATR 2, 3, 4, 5, ... up to 14. Who's the biggest, who's the smallest? We plot it, and everything else fell between that range, and that's the ATR range. Once again, no magic numbers. So far, we've got an inside bar happening on the day and the week. We have a higher high in the month. Okay, 61.29 has to be taken out for price to move until this candle closes, and looks like we'll get a lower high, higher low here, and we just plotted. So you can see now we need to break out one of these and start taking out more of those horizontal lines. Okay, bid-ask candles. Let's just move on here. I was going to show you the ATRs, but I didn't have a chance to update that chart. But that's it, fellow traders. Seeing is believing. If you see something enough, you're going to start to believe in it. And then if it's true, keep doing it. Because remember, and don't forget, it's not what you trade. It's how you trade it. So drain the banks. If this is your first time here, come down here, hit subscribe, hit like, hit the bell to be notified.